The Federal Reserve just flipped the table. They're not cutting interest rates now, but might start later this year. Confused? You should be. Because when the Fed changes course, it impacts everything: your debt, your job, your investments. This video breaks down what their 2025 plan really means for your money. If you're serious about building wealth, hit subscribe to Money Always right now for more money skills school never taught you. Let's dive in. The June Fed meeting left us with a split message. They said, we're not cutting rates now. Then added, but maybe we'll cut a couple times later this year. Wall Street cheered. But not everyone's convinced. JP Morgan? They think we'll get one cut in December. Maybe. And honestly, they might be right. Because Powell said something else that matters more: tariffs. His words? The cost of tariffs has to be paid. Tariffs are basically taxes on imported goods. If businesses have to pay more, they raise prices. That means you pay more, aka inflation. And inflation is the Fed's worst enemy. That's why they don't want to cut rates yet. Powell even said, we expect to see more price increases in the coming months. Inflation is already creeping in. Cutting rates now would add fuel to the fire. So the Fed's holding back, for now. But what about the economy? Powell says it's still holding strong. But cracks are forming. They downgraded GDP growth from 1.7% to 1.4%. And unemployment is now expected to hit 4.5%. That's a clear sign of a slowdown. Powell admits, risks of higher unemployment and inflation have risen. So yeah, the vibes are off. Other countries, meanwhile, are making bold moves. Switzerland just cut interest rates to 0. They're even talking about going negative. But the US, still cautious. The Fed said they expect fewer rate cuts in 2026 and 2027. They're planning for long-term inflation pain. But if the economy tanks faster than expected, they could be forced to slash rates anyway. That's why investors are watching every move. You should be too. The current tariff pause ends July 8th. Trump is expected to announce his next move. And history shows us. Tariffs, market panic. But volatility, opportunity. If you're a long-term investor, you buy the dip. Ignore the noise. Stick to your strategy. Stack assets. Learn your style, ETFs, index funds, stocks. Make it personal. And for weekly financial breakdowns like this, subscribe to Money Always right now. We make money simple, so you can make money real.